Hey everyone, Rob B here with Rob D, and you are listening to the Property Podcast. Now this week, we're talking about a change that's going to impact millions of landlords. This is not some optional homework that we might need to do. No, for millions of us, and myself and Rob included, we will need to be doing this, and it's completely different to what's gone before. Now, with tax, it can be a tricky subject. So luckily, we've got an expert on this week who can guide us through the process and make sure we are the most efficient landlords and investors possible.
Welcome to the Property Podcast. In case you don't know, we run a business that buys more than £100 million worth of property every year for our clients. You can find out about that at propertyhub.net/invest. And when you're investing, of course, you need to know about all the property stuff. You need to know about mortgages and you need to know about tax. That is why sometimes we bring experts onto the show, specialists in those areas, to enlighten us all. And that is exactly what we've done today. So keep listening.
It's time for our news story of the week now. And we've got some really interesting data to take you through. This has been released by the ONS, the Office of National Statistics. They've produced a report on private rent and house prices. And Rob, each week we cherry pick the most interesting news story. And we had to pick this news story because we do love a bit of data.
Yes, and rental data is really interesting at the moment because we obviously had those few years when rents went absolutely bonkers. But the trend over the last year has been coming back down to something more normal. And that's continued in this data. The rate of rental inflation now at 4%. Which isn't that much higher than inflation. Inflation at 3% in the moment. So those rocketing rents of around about 22, 23 do seem to be over. Or over in much of the country anyway, because the thing that really stood out to me from this data was the regional picture. Because I can't remember there ever being such a difference between different parts of the country in the rates of rental growth. Unsurprisingly, perhaps, London had the lowest rate of growth, only 2.1%, so below inflation, of course. But the Northeast, the highest, Rob, 7.9%. Wow.
That's crazy, the difference. That is absolutely huge. And that very much lends itself to what you said previously, Rob, that recently you've noticed rents in your area in London to have softened. But there's that anecdotal evidence and then there's the hard data. And when you see the hard data and the variance between these areas, it's absolutely crazy. Not far behind the Northeast is the Northwest in second place. Then it's East Midlands in third place. Northwest being above 6% and East Midlands being above 5%. So while the average may be just shy of 4, there's, as you can see, the regional story here is really interesting. And we often will see that with house prices. And the data reflects that here as well. It shows the vast difference in house prices. It shows London falling. And it shows the Northeast and Northwest as the strongest performers again for house price growth. But seeing such a variance in rent is really interesting and something that we've not really talked about too often on this podcast. And that's why I love doing this segment of the show, because let's face it, the BBC aren't putting this on their homepage, but you as an investor, these little stories that we can pick up and bring to you help you become a more informed investor. So I hope you're geeky enough to appreciate this week's news story as much as we've enjoyed it. This is a really important subject, what we're going to cover today, because millions of landlords are about to face one of the biggest changes in years, which is making tax digital for income tax. But millions of landlords don't know. They just don't have the awareness. Or if they've heard about it, they don't understand what it is. And you know what? I was one of those landlords. I kept hearing about it and knew it was coming. But let's face it, it wasn't something that I was desperate to find out about. But as that deadline is now rapidly getting closer and closer, we need to know about it. It's not optional. And all of us, the millions of us, need to be prepared and need to know exactly what we're doing. So this week, we're very lucky to have Nadeem from Provestor sit down with Rob D and talk about what making tax digital actually means, who it affects, and most importantly, what landlords need to do now to avoid being caught out. It's a must-listen episode because we're all involved. We all need to understand, whether you're an aspiring investor or a current one, this is part of the world now that we live in, and you need to understand what is going on. So I'm going to hand it over now to Mr. D and Nadeem to take us through all the core details.
So Nadeem, it's called Making Tax Digital, but what actually is it?
Yeah, so Making Tax Digital is HMRC's new system for reporting rental and self-employment income. And instead of one tax return per year, which everyone is used to filing by 31st of January, you'll now be submitting quarterly updates digitally. And it's mandatory for landlords and sole traders who are earning above a certain threshold, which is £50,000 starting April 2026. And the key points really are here that it replaces the traditional kind of self-assessment, one time per year, 31st of January, providing your accountant with a shoebox of receipts and paperwork. And that's now replaced with 4 quarterly updates per year, which are due on the 7th following the month of each quarter. So that's sort of April, May, June, July, August, September, October, November, December, and then January, February, March. So very much in line with how VAT returns are submitted for corporations, now done for self-employed individuals and property landlords. And there's the final declaration, which is still due by 31st of January, which is still effectively a tax return. That's also due. So you could argue there's 5 now submissions required as opposed to the historic 1 that you do. And obviously the key thing now is that you must now use an MTD compatible software, no paper returns, no manual HMRC forms. All your bookkeeping must be done digitally and submitted to HMRC electronically every quarter.
So the shoebox days are over. So you're having to do everything electronically and more frequently, but critically, you don't have to pay tax every quarter, right? Just report your numbers.
Absolutely, yeah. So the fundamental difference there to a VAT return, the example I gave, is that there's no actual payments that are due every quarter. This is just a reporting requirement of your income and expenses, and it forces you to do it in a digital form using a digital platform. And obviously what they've done with the thresholds and the dates is they phased this in so it's not affecting everybody straight away. We are starting with a qualifying income of £50,000 or more for self-employed or property or combination of the two. And that's mandated from 6th of April 2026. And that's based on your 24-25 income. We then have a qualifying income of 30,000 plus, which will start from 6th of April 2027. And that's based on your 25-26 return. So actually, when you look at your 25-26 income, that will factor whether you're then actually caught from April 2027. And then finally, from April 2028, where the qualifying income is for £20,000 plus, where HMRC expect 85-90% of landlords to actually be within the system by then. And again, that would be based on then your 26-27 return. So really important to keep an eye on your income for the next few years to make sure you're aware of when you fall, if you fall. There are a few nuances as well within MTD, which is once you are actually in it, you can't leave within 3 years of being in MTD. So if, for example, your turnover is, your qualifying income goes above 50,000 and you're in as of April 2026, if in 26, 27 and 27, 28, your income goes below 50 or even below the other thresholds of 30 and 20, you're actually still within MTD and you're caught within MTD for 3 years because you've already qualified in that first year. A lot of nuances, lots of little things to be aware of. Very important to be having a conversation with your accountant about. I'm sure we'll come on to this point later on. So really important to have a real clear picture of what MTD now means for you as a landlord.
Yeah. And there'll be a lot of people who've got properties mostly in limited companies because that's so popular now, and the limited companies not affected by this. But there are a lot of people who've got their properties in a limited company now, but they might have one property that they've got historically or for some reason that they still own it as an individual. In that case, unless it's the rent is higher, that might not affect them from 26. But as that threshold comes down, it sounds like it's going to catch most people in the end. So even if you do have just that one property, but everything else is in the company, MTD is still going to become relevant for you.
Absolutely, yeah. So, I mean, and HMRC have already come out and said that below £20,000 is not mandated for now, but it will do. So it's almost teeing us up to say that there is going to be a date in line where it will come to say that even anybody with sort of, £4,000, £5,000, £10,000 worth of gross income is an MTD. So certainly worth keeping an eye on those thresholds, having those conversations with the accountants, making sure you're aware of where you are and where you sit in the world of MTD going forward.
So this is something worth paying attention to now, even if you are not immediately affected, because you will be in the end.
That's right. So HMRC are phasing it in like it's very similar to how they did with VAT, and it allows them to get their systems up to date rather than chucking everybody into the system from day one. And ultimately, who does this apply to? It applies with initial threshold of £50,000. So the threshold of £50,000, it's really important for people to understand this, Rob, because the common misconception is that the 50,000 for, especially for property investors, is profit, and it's not profit. It's actually gross turnover, revenue, whatever you want to call it. And that same applies for property income or self-employed income or a combination of the two. So if you have property income, gross income of say 30,000 and also self-employed where you earn 25, 30,000, actually you are caught with an MTD, even though independently they are below that £50,000 threshold. test level is based on your 24-25 tax year. So actually it's really important that you try to get your 24-25 one done already if you've not done it already, because that is what HMRC are basing their assessments on, and that's what you need to be making your assessment on as well. And actually similarly for 25-26, if in 25-26 you meet that criteria, it puts you then into 26-27 for MTD purposes as well. So it's really important. It applies to all individual landlords with personally owned properties. All properties are caught within this. So whether you have general vanilla buy-to-lets, HMOs, student-lets, commercial, furnished, and actually even overseas properties as well are caught within this MTD digitalization requirement. And the fundamental shift here is that you have a requirement now to digitally keep your bookkeeping records, submit them electronically, and obviously then sort of maintain your records in a better capacity. One important thing, again, a misconception is that people think that every quarter they've got to pay the tax as well. That's not the case. Payment is still only due at the end of the tax year, and it's not due actually during the quarter itself. So ultimately what we need to be aware of and notify clients is that don't worry, just because we're making you do things on a quarterly basis, you won't have that payment requirement. You've effectively just got a reporting requirement. The payment is still done at the end of the year, 31st of January.
Okay, so it sounds like at some point, pretty much everyone is going to be having to operate this way. Is there anyone who owns property who's not going to be affected?
Yeah, so as you've outlined, Making Tax Digital, it affects individually self-employed people or personally held landlords. Currently, and we don't see any signs that it's going to affect limited companies. Making Tax Digital won't come in place for limited companies. Similarly, there's no announcement for partnerships or LLPs for it to be introduced right now or in the medium term. That could well come later on. So right now, limited companies, partnerships have no requirement to register for Making Tax Digital. And I think the last one, potentially in terms of misconception, in terms of when you have jointly owned properties between husband and wife, people think, oh, do we not need to register because we're a partnership in the sense of having jointly owned properties? The same rules apply in terms of looking at the split of your income. So if you are husband and wife, brother, sister, who's doing something in a joint capacity, HMRC will look at your share of the income. So again, if you have £60,000 worth of gross income, each of you need to look individually whether you're caught within MTD based on your respective share. So if that's 50-50, one has 30, the other has 30, you then need to confirm yourself individually whether you're caught within MTD or not.
So it seems like at some point, everyone who isn't operating in a limited company or a formal partnership or LLP is going to have to operate in this way. It seems like quite a big change. I think a lot of property investors are used to the way of operating where you just wait till the end of the year, then go and sort of like dig everything out, chuck it at your accountant and hope for the best. But this seems pretty different. So what practically are we going to have to do?
Yeah, it's quite a fundamental shift away from how people have been keeping their records or expected to file, like you said, Rob. So the fundamental thing here is that you will now need to keep detailed digital records throughout the year, and that's from April all the way to the following April, and using some sort of MTD compatible software and tracking your rental income, tracking your expenses, and making sure you update HMRC every quarter. Now, what does that mean in practical terms? Well, in practical terms, it still means you can use a software, a spreadsheet, for example. We're not saying you'd have to use all singing, all dancing accounting software. You can still use a spreadsheet format where you've got your income and expenses, but that needs to be fed into a Making Tax Digital compatible software, which can be uploaded and fed into the HMRC system every quarter. Similarly, you can get a sort of an MTD platform, which obviously on a subscription basis, where you will have to obviously update your bookkeeping, as it were, every quarter and submit that to HMRC. And then obviously at the end of the year, still do your tax return based on those 4 quarterly submissions you're doing. So it does require you to move away from that shoebox, keeping all your paperwork and shoving in a corner until you're ready to pass it over to your accountant. So a little bit more proactivity from landlords is required now, whether that's, straight away from day 1 April or at least once every quarter when it's due.
Not everyone is going to be working with an accountant, but a lot of investors are. If you have an accountant, is this something that you would expect them to be submitting for you? And if so, are they going to be charging more for it?
Yeah, interesting question, because you will need an MTD compatible software to submit this. So the first question is, does your accountant have a MTD compatible software? Is it just an accounting software? It needs to be able to maintain the records as required for HMRC for MTD purposes. If you are using a spreadsheet, will your accountant accept that, or will they want that already fed into a platform that goes automatically? So my advice and Provestor's advice is definitely start speaking to your accountant now, because if it's not affecting you this year, it will affect you next year or the year after. So it's going to affect you pretty soon. For those clients who do have an accountant and they have software available to them, great. For those who don't, my advice is go out there and have a look at some software providers, because HMRC will be offering some free softwares. From our experience, they're not going to be great because they are designed to be very, very simple. And as we know, landlords in nature, we have complex needs, complex transactions, and you will need something that's a little bit more robust in terms of record keeping. And actually, what you want to do is ideally be in a position where you're using MTD compatible software, which is ideally for property investors. So have a look around, get yourself in some sort of MTD platform sooner rather than later. You don't necessarily need to wait until you're actually within the MTD system. You could start, now and get yourself in a way where you're already doing those electronic submissions every quarter, because it's just a good way of doing your bookkeeping. And if you're more proactive on it, the better for you. So what you want to do is looking around right now, getting the right thing that meets your requirements.
Makes sense. And in terms of actually getting hold of the information, if you're using a letting agent, they are presumably going to have a lot of the information you need about costs that have been incurred and things like that, which they might not be in a rhythm of providing. So what's the shift that's going to happen there? What are you going to need to ask your agent to do?
Yeah, so, your letting agent, as they haven't before, won't do any submissions for you. They will normally give you your management statement at the end of the month or end of the quarter, and then, say on your merry way. And of course, most times the statements that they will provide you won't be complete anyway. They'll only have some of the information. They won't have, other costs that you've incurred in terms of your mortgage interest or the repairs and renewals. So they may give you an overall summary of your rental income for the period. That needs to be fed into your MTD software. So if you've got a software which is, AI led, where it can just feed in and drip everything out and sort of allocate where it needs to, great. But that will need to be still fed into your MTD software, sort of line by line, as it were. So you're actually getting all your costs, not just what's being provided from your agent, into the software for each quarter.
Yeah, so it's not just the bottom line number. You literally need every transaction that's taken place, right?
Yeah, exactly. Yeah, because ultimately what you've got to remember, Rob, here, we're doing a mini tax return every quarter. And the mini tax return includes all your income and all your expenses. So it's like what you do at the end of the year. You collate all your information, all your expenses, not just what's on a management statement. So that will require you to go and look at your mortgage interest statements and pull out what you need. So that goes into your MTD return. If you incurred cash expenses for any repairs or maintenance or insurance costs, which your management agency company won't be aware of, they all need to go into your return.
It's a good point actually around mortgages, because we normally get mortgage statements annually. If we don't get those quarterly, then are you okay to just enter your interest payment because you know what it is, because you can see it on your bank statement, or is there more to it than that?
Yeah, and that's a good point, because a lot of people who have sort of a repayment mortgage will rely on that mortgage interest statement at the end of the year, which then goes into the tax return respectively. So in those instances, you may well need to either request sort of more periodic interest statements or be on top of actually how much interest you're paying. Now, remember, the quarterly return, it needs to be as accurate as possible. If there are little things like the mortgage interest, which is you cannot get because physically the bank won't provide you the exact amount of interest and you cannot calculate it any other way, then you do an absolute best guess estimate, because obviously the whole purpose is that when you do your tax return at the end of the year, your fifth submission, it washes everything out and actually you do everything and then you pay tax according to that. So if we're a few pounds off here and there on the quarterly submissions, it's not the be all and end all, because you're not actually paying any tax based on that. It's just submitting records to HMRC and then you wash it out at the end of the tax return.
Okay, so some people will handle their own submissions and will need to talk through how they do that. But some people will be using an accountant. So if you are using an accountant, do they just take care of it and just kind of it all gets done in the background for you, or is there anything you have to do?
Yeah, maybe, Rob, and this is why it's what we're advising people is to speak to their accountants as soon as you can, because again, we're only a few months away from the introduction of MTD. If you've got an accountant, speak to them now, ask them, will they register them for MTD? So work out whether that's something your accountant will do, whether you have to do that yourself. Will they handle the quarterly submissions? Or again, are they going to put that on you as the client to do? And they'll just continue with your end of year filing. And of course, what will this cost? Because it's now an additional compliance ask on your side. So is that something which, is going to cost in addition to the self-assessment? And then obviously in terms of the software, the MTD software, is that something that you will be required to get yourself? or will your accountant give you access to move on? And obviously, even if the accountant handles the submissions, you're still likely to keep digital records throughout the year. So, the old way of handling everything doesn't work anymore. Find out what the requirement is. Is it on you? Is it on the accountant? Is it a combination of two of you? And, things like having a separate bank account, Rob. I know I've batted on about this point many a time in lots of different conversations we've had. It's now even more so important, obviously having those conversations with your accountant, because if they say, well, we want you to be using our platform, our software, which is going to be linked automatically to your bank account, because that will make the whole digitalization of your bookkeeping very easy. Absolutely, you want that in a separate bank account right now. We certainly don't want that mixed up with your personal account where you're going to have hundreds of other transactions. Might frustrate the accountant because they've got one property to deal with, but they've got hundreds of transactions of their personal affairs going through it. So these kind of things, you really want to get your ducks in a row, because ultimately, if you are working with your accountant, you want to make sure actually by April, everything is in place. So if you're thinking this sounds like a lot of work and you don't currently use an accountant, maybe now is the time, because ultimately there's a lot more compliance needs on you. We certainly don't want to be late with any quarterly filing. Although HMRC have given some sort of dispensation for the first year, they'll come out and said they're not going to, they'll go down a ton of bricks on people with late submissions, certainly for the first 12 months. But this is, I guess, a good time to go and maybe find an accountant or someone who can help you specifically with an accounting software. There's lots more information on MTD on our website, Rob. So provestor.co.uk/MTD. We've got lots of guides, tutorials. We've got some YouTubes. We've got our award-winning software sort of displayed there so you can see how that looks. We've got an AI-powered bookkeeping quarterly MTD solution. Without going into too much on the sales pitch on that, there's lots of information out there, not just our software, but lots of providers out there. Go out, have a look, get yourself ready right now. And, if you want to get yourself into an MTD software solution, even before you go in, that's the best way to be.
Yeah, definitely feels like the time to start taking the record keeping more seriously. If you have just got a couple of properties and you've been getting by up until now, possibly time to talk to an accountant, definitely time to get a separate bank account.
Absolutely.
So you mentioned software. It needs to be done through specific MTD software. What is that? What's out there? And is there anything that you don't have to pay for?
Yeah, so HMRC expects there to be some free options available and has asked providers to actually make some of their software solutions free in nature. And there are a few emerging. But honestly, most landlords' situations are far too complex for sort of minimal free products to handle well, especially when you've got, joint properties or multiple properties. And we know dealing with accountants, nothing's ever simple and clear. So at Provestor, we've built an app specifically for landlords that handles all the MTD complexity. That's joint ownership, mortgage interest treatments, capital revenues. The prices start at $9.99 per month, and it works whether you have an accountant or you're doing it yourself. The app handles the quarterly submissions, and if you want, our team can do everything for you as well. But the key is, picking a software that actually understands property. General accounting software is built for traders and small businesses. Property specific is going to be specific to you and actually easy for you to understand.
Okay, we've covered a lot. Let's make things really easy and give people a to-do list. So we're a few months out. What are the next steps? What should someone start working through right now?
The first protocol is obviously speak to your accountant. Make sure you're aware of how MTD is going to affect you, whether it's this April or following, and what the solution between the two of you is going to be. Choose an MTD compatible software if you are affected by this April and get it set up. And make sure you're actually signed up for MTD as well through your HMRC account. Again, speak with your accountant. Is that your obligation? Is it theirs? Is it a combination of the two? You got to get it done. And then from 6th of April, of course, start keeping digital records. By 7th of August, that would be your first quarterly return submission deadline, effectively. So that's a key date to keep in mind if you are starting from this April onwards. If you're not affected from this April, you're in the £30,000 to £50,000 range. Keep an eye on sort of April 2027, that that's going to be your sort of kickoff period. But obviously you can start voluntarily. So if you start thinking that actually, I'm pretty sure I'm going to be in for the go April 2027, can I start shopping around? Can I start having a look at other software providers and start getting in somewhere voluntarily? Great. And obviously the advantage of that is you're getting comfortable with the system before you're forced into it effectively in April 2027. If you're below the 30,000, keep an eye on the limit, keep an eye on your gross earnings. You never know, the threshold may drop in the future, and, consider bringing those good habits into place now. Don't wait until you're forced into doing these things. Do them now, nice and early, so when your staging date does start, you're up and running.
So a huge thank you to Nadeem for all that knowledge, all that information. If you've only got properties in limited companies and only in limited companies, then you do not need to go through this process. But it's worthwhile understanding as well because circumstances change, right? We know that there's so many landlords out there who have both. I'm one of them, Rob D's one of them, and millions of others, as I said earlier, are in this boat as well. So it's important to understand what is happening. But tax can be a challenging subject to absorb. So if it still isn't quite landing, we've also done a YouTube video on this very subject. So if you want to double down to really understand what's playing out, then we'll link to the YouTube video in our show notes as well. And if you haven't subscribed to our YouTube channel yet, please do, because we're nearly at 100,000 subscribers. And that's a really lovely way to thank us, is just clicking a button. So please do that if you've enjoyed this week's episode or any of our content, in fact. Now, Mr. D, I'm going to bring you back in for a Hub Extra. And I'm going to be honest, when you said that this week's Hub Extra is a drink, I'm going to be honest, I wasn't that excited, but maybe you can bring me back up. Like, normally we geek out on AI or paddle or a new TV show or book. Either after 10 plus years, we just run out of stuff and you're going to introduce water, or hopefully something a little bit more.
It's an AI enhanced drink.
Oh, I'm in.
Having a Liverpool mug. No, I'm trying to find something. You're going to have to come with me on this one. Okay, look. It's perfect for a tax episode because tax sounds boring, but actually really worth knowing about because it can save you a lot of money.
Okay.
There's my angle. This sounds boring, but actually it's really helped me out because it's helped me cut down on the amount of coffee I drink. So that's the thing. And I know, Rob, you've got this problem as well. You have your quota of coffees for the day. And then after you've had your last one, it's like, it's that sad moment in the day. And I had that as well.
It is. I'm counting down the hours to bedtime at that point, just so I can go back and do it again.
Exactly. So I was looking for a replacement, like herbal teas and stuff, and never really hit it for me. So I asked ChatGPT what it could recommend for me, and it gave me a few options, one of which was chicory root drink, which I appreciate sounds really weird. But what it basically is, it comes in something, it looks like powdered instant coffee. You just put in a couple of teaspoons, add hot water, and it's got a unique taste. When I say unique, that makes it sound like it's a synonym for bad, but no, it's just different. But the main thing is it's got that kind of like coffee-esque bitterness and full taste to it. So it does feel like an actual coffee substitute in a way that nothing else ever has for me. So Rob, I'm not going to pretend that I don't still mourn my final coffee of the day, but it does make it a little bit less painful. And I get a little bit of a placebo kick from having this drink. So I hope that pitch at least has lifted it above my previous Hub Extra where I was talking about bus timetables. So it's at least not the worst Hub Extra we've ever had.
Well, we'll let the listeners decide, Rob. The link will have to be in the show notes because I'm sure many listeners like me have never heard of it before. So we'll link to it in the show notes. But while we're on that theme, if you are looking for alternative drinks, I'm partial to a nice crisp beer, but on a Monday, it's probably not a good idea, or most of the week, in fact. So I've started drinking a lot more zero alcohol beers, like an alternative to coffee. If you're looking for an alternative to beer, you want to enjoy the taste, but not have all the downsides that go with it. My favorites are Peroni Zero, Lucky Saint, and San Miguel Zero. All very, very good. I feel like I'm still having a treat, and the benefit is much lower calories as well. So there you go, an alternative to coffee and some alternatives to beer.
There you go. How much more value do you want in an episode of the Property Podcast? We've saved you from a potentially massive fine from HMRC and brought new beverages into your life. I think that is plenty for 1 week, but we will be back to do it all again next week. So until then, have a great week. We'll see you soon. Bye-bye.
Bye-bye.